Hello, I'm going to do a recap of today's trade. It was this long here, and I closed again with 30 points, repeating the trade I've been posting these days, since I missed this one here, this long. Here I had another opportunity. So well, basically, what was the market doing? It kept falling, falling, falling. At the opening, I did nothing. These are the days that show me that I am using the right system. This strategy is healthy for me, because I don't have to get up early and scared, because I missed the best setup of the day and didn't take it. So, due to the problems with rhythmic, with the volume, there is a lot of lag, a lot of delay with order execution. I'm practically skipping the entire opening, and here peak started to drop. So at this point everyone is saying, no, it went without me, and they start chasing the price. And of course, there are going to be days when the price simply goes, and, well, tomorrow is another day. But here, it started to I was watching it for a minute. It started to come back to this imbalance. So what was I watching? Okay, here we have the formation of what I mentioned in another video, where the price starts to do this. Sometimes, it makes a strong impulse to induce, then it comes to sweep all the hikes, and from there, a double top formation can occur. So that's what was forming around here, and here, the strong impulse actually happened. In the higher time frame, I didn't see much more. I just saw that this first touch was taken out. This first touch was taken out with this small area from London to London, and that's all I saw. I wasn't interested in being the most precise about where the price was going to touch. No. I let the price come, give me a narrative, and that's it. What was I thinking here at this moment? Well, let's see how the price reacts to this imbalance. Just to make sure it doesn't do the same in the imbalance as it did up here, it arrived just like in the imbalance video I posted for you. It hits this candle, touches the imbalance, and continues. So here I was, waiting for it not to do that again. I was waiting to see what it did. I was really following the moment, seeing how far it would go. I wanted to see how this candle would interact. I saw that it closed with its body inside the imbalance, instead of making an immediate rejection. So I said, okay, things are starting to look good, and then we close the imbalance properly. Indicative? And there are several imbalances. So what's the first thing I say? Well, let's see how the price reacts when it takes out this high. Why this high? Because this high was the first touch to this area over here. So this is my first point of interest. What do I see as my target? The price simply gets here and takes everything out directly. Closes with body above the first touch, and then also takes out the extreme area from where this information was provided. So, what's left here? This was the first long that I missed, the one responsible for changing the order flow in this time frame. I couldn't catch it, and this is where the price reaches. Here it starts. What did I say? A strong impulse starts to accumulate. Not just any accumulation where you don't have a clear strong impulse. No. It's an impulse, and it directly starts to accumulate because we know what the price is going to do, that down here it will generate a imbalance. This was the next swing we were in. It has its responsible party, and we took it out of this area. Then I see that the price doesn't reach here. I really intended to go long directly from here, but it started taking too long, taking too long, taking too long. So what happens when it's taking too long? I have several 1-minute imbalances. I've already closed these two. There's no more. I can assume I have a higher time frame imbalance. The price is waiting for a higher time frame imbalance. So here's my entry. It was 3.5 seconds past 11:30. And this is the candle that closed at 11:30. And this was the one that opened at 11:30. As soon as the 5-minute one closes, this is the one that closes the 5-minute one. And the other one comes and enters directly into packaging. Plus, this manager, look at the perfect touch, and rejects directly entered the market. As soon as I saw this, now let's see, it goes and touches, and directly entered the market. This is one of the most algorithmic things one can see. The price stays like this, calm, and right at the close of the 5-minute candle. I was waiting for the next 5-second one. Opens, it touches and goes back. So I entered the market as soon as I saw the reaction. I enter the market. There were several 1-minute imbalances. Yes, but no. They were not my interest, because I knew I was waiting for the close of this candle. So you start anticipating, and you take the low of the candle that is being traded in 5 minutes, until that moment. So that's what you aim for the price to reach, because that was the lowest point, until then. So well, that was the entry reasons to go higher, all this. Even if the price came to make a double top from around here. But there were reasons to go higher. That's why I told you guys not to operate these first areas in these movements that are like this. These first areas, we are not always going to look for the extreme area, or otherwise take them out, and there's an imbalance above that. So eventually, all of this gets taken out. So that was the entry. And over here too, there was the trap. I'll share the case studies on the disk. Let me show you over here. Look, here's this. And the 1-second chart. Here's the flip. It's responsible. The trap. And taking this out isn't a flip. It's just more accumulation. It came a bit, and that was it. So you can see the price. Fractality. They are trades that I have shared. I operate them in both directions. Sometimes if it goes up, I operate it down. Sometimes if it goes down, I operate it up. This is daily. Daily chart. This is 5 minutes. And there it is. So always the same. And from there it went. I finished with 30 points. So that was today's execution. Oh, by the way, another nice detail was this. I forgot to mention that when the price rejects this high, this 1-minute high, I'm already anticipating that the price is approaching here to take the low of this whole displacement leg. And here, what it's doing is waiting for that 5-minute candle. So this is another thing that prevents you from entering long prematurely from over here. Now we know that the purpose of a rejection is to take the low of that displacement law. So everything came together. This was beautiful. Seeing it in advance with the reading I show you in the videos is very nice. And, well, there you go. Just being patient without chasing the price over here without getting carried away by this inertia, by this price momentum. The price will provide you with opportunities. Those who chased the price in this imbalance got caught up in it. And then they start looking for shorts from here, but they haven't realized that the order flow is already changing. The price failed to give a first double top. The price didn't deliver from the 1 minute imbalances that were around here. It has already closed. It's already giving all the bullish indications. So don't start chasing the price. Read it. Let it give you indications. And the good entries will come. I hope this helps you. I know the operation videos become very repetitive, but that's the idea. To show that the same principles always apply for entering. Nothing changes. The candles just move in a different way. They paint differently. But the logic behind it all is the same. I hope you have a very good weekend. Bye-bye.